Okay, guys. I've been giving a bit of thought to some of the questions that I get all the time, and it's always the same. Don't understand madness. Don't see how it works. Well, it works through maths. Losing more than I'm winning. Well, that means you're not working out your stop against your profit because the stop has one job, one period. Stop you blowing the account apart. All right, that's all it does. So when you start trying to force the RR narrative, what you're doing is you're putting yourself in front of the freight train. Now, there are other ways that you can do it. This is personally how I do it, and I've done it this morning. I showed you the fib on this. I am working between that zone and that zone. It's been there for hours. I work on hourly charts and only enter on small charts. So I know what the narrative was. It was down. And then there you go. I've done 53 quid this morning on just getting in, working out. I don't necessarily hold the trades all the time. I'll hold it for an hour, take the money, and then re-enter. And then once I've got paid, I'm fine. But it is always between these 2 points. Now, you can work that principle on anything. This is a chart I've set up for next week. And this will be on that sort of hotel challenge thing that I'm doing where I'm testing the weighted sheet. But the weighted sheet is identical to what you're already working with. It's just a bit tighter, that's all. And I'm trying to work the weights out. So it's nothing to get upset about, which some of yous are. And I can't understand it. But then I figured it out. It's because you're too hungry for money and you're chasing things. And like most things, if you're greedy and you're gambling, you'll blame anybody but yourself. Well, that's got to stop. Because every single one of you that sends in a nasty message, boof, you're gone. And it's that simple because I've had enough. All right. But with that said, I understand what the frustrations are as well. So if you're frustrated and you say, I can't see this, then of course I'll help you. But you send a message saying, bloody pay me my losses, you fat bastard, and I hope you choke to death. Well, that's unacceptable. All right. So that's the difference of the messages that I get. And I get them all the time. And it's just beyond a joke at times. So when this comes down, what are we looking at this point? Well, if you're trapped between that red zone and that red zone, which is where the price is, then your stop is naturally on the other side of them. All right. The higher you go into the range, the bigger that stop is going to be. But the price also oscillates around, as you can kind of see. You know, even here, if you're looking for it to break out, it'll push up and it'll pull back. Here it'll push up, it'll pull back pretty deep and then push back up again. The issue comes when you're trying to put too much into the market to get it out. But that's where madness kind of takes over. Let me illustrate it in a way. So if I was to look at the euro dollar at this moment in time and put on an ATR. Now, the first ATR you look at is the daily. So that's currently running approximately 101, 100. So by definition, if you work on half of that, that means your stop is roughly 50 maximum. All right. So you've got plenty of room to work with. So that's your maximum stop. But doesn't mean you've got to get 50 out on the other side. It just means that you know what the cost is if you're wrong. And you've got to let these things breathe. Now, how far will it move? Well, let's have a little look. So let's get it 50. Right. You've got a 50 range here. So realistically, if you're going long, you want to be entering on the base of this line or below, and then that's nice. Right? So you're entering in and around this arena, the bottom half of GoldenEye to go long. That's the principle. Likewise here, at the top, to get out. Again, the higher, the better. So that can give you a baseline of what you're looking at. It's just a snapshot. All right, that's all it is. Now, sometimes your stop is going to be pretty wide. But as long as you're aware it's wide. So if you're comfortable at a pound a point at 50, you would be uncomfortable at a pound a point 100. But if you are happy with the 50 quid, the way to get round it is you half the position size. Now the monetary cost is always the same. That helps you. So in that sense, you double the stop, half the position size. Okay. Now the next part of it is this. Right. So if you know, we'll just use easy figures of a fiver. All right. So you're putting £5 into the market, half a lot. And your stop is 50. You're putting 250 quid into the market if you're a traditional trader. Okay. Well, they tell you you want 2 to 1. So you're getting £500 back. But that's assuming you can hold this thing to 100. Now, that daily ATR has just told you what the maximum parameter is you're going to get, which is 100 in a day. So the chances of you doing that in one day is pretty darn slim. This is where win rates and everything fall down on that system, because it's an over expectation of what the market is trying to give you. So in realistic terms, what you have to do is reduce the target. So you can either go, well, I'll do 1.5, but 75 is still a tall order. Well, I'm down to 1. Well, 50 is doable. So now you're on 1-on-1. So you've got to make certain your win rate is absolutely cock on the point of entry. Now, if you can do it, amazing. But what inevitably happens is people do this. They drop it down to 20 and then do 2 to 1. Well, at 20, if we go back to this scenario, put that in, is this little box. Between that trading arena, you have literally got nowhere to go. It's going to hit it all the time. So the only time it'll work is if you're coming in off one of those levels and you pray it doesn't try and retest it. Well, history tells you it does retest it over and over. And the reason it retests it is because on those turning points, the institutional levels, they know the stops are going to be roughly above it. And they know you're told around 1 to 2% of account. They can work out, well, what's an average price? Pound a point. Well, okay, pound a point. What's 1 or 2%? Well, it's about 20 quid. So that's 20 pips up. They know roughly where you are. So all they have to do is force the market up and test it, and then bang, they take you all out. Nightmare, all right? Which is why that's called death by 1,000 cuts. Okay, so let's go back to the scenario. So realistically, that does need to be there. But now what's happening is this bit, if you hit it every once in a while, brilliant. But that's it. It's every once in a while. So therefore, knocks you out the equation all the time. How do you combat that? You don't look at the money in the first place. You just look at the process. So if we come over here, and I've got a fiver in, and I've got a target, well, if it's just the same, and I put the stop in just the same, okay, there's a hell of a bloody difference here. There's a hell of a difference. And why? Because I now need to start working this lot out. So get rid of that. Get rid of that. We'll put that down to 1. Okay. So it's equal. All right. So madness at this point is equal. How often do you hit the nail on the head? And I mean absolutely hit the nail on the head. Very rarely. Did it step back once? Maybe twice? Well, let's just assume that you can get in on the second entry most of the time, right? Okay. Well, what happens is it immediately reduces your investment, this bit. So even if it ran to target, you can go, well, I'm only getting 250. He got 500. Yes, but you only put 125 on the table. So he's all in. You've got 2 goes at it. So if that one gets you some money, brilliant. You've got another go at it because you haven't spent any money. But if you get both orders in, just like so, even just stepping it back a little bit, your investment is significantly less than that investment, but your profit is significantly more than what that is, just by stepping back slightly. Now, if you're a conservative trader, you might think, well, it goes back a reasonable amount against me, but it's not as far back as you think. It's like 15 pips. DAX will do that in a heartbeat. Even that euro dollar will move 15 pips against you. Okay, so the first 2 positions, they're going to pay you reasonably well, and you've put nowhere near the investment the other guy has, but your RR rating is higher. You get your 3rd position in, you've still not spent anywhere near what the other guy has from an investment point of view, but you're earning more back, and you have the ability to chicken out. So if you chicken out on this and you pull the plug at the point of entry, you still get 83 quid. This guy gets nothing. It's a wing and a prayer. Right, okay. Well, let's change the dynamic slightly. That target is a little bit high. So we're going to take it down to 75. Well, at 75, you've still got an RR of 2.8. Let's take it down a bit further. 60. It's 2.3. Let's take it down a bit further. 50. So the target of one-on-one, 50-50, still gets you a 2 return against the investment, and you're still getting your 83 quid if you chicken out. Now this chap, we take it down to that. Okay. Same target, same stop. One-on-one, high risk, because they have to be right. If they chicken out, they get nothing. 5 are in, 5 are in. 50-50, splitting it 3 times. You invest 167 versus 250. So you can have another go if you want, or quit the day and still have thick end of 80 quid more in your pocket than the other chap did. But if it wins and goes to the target, because the chances of it just stepping back 17 pips, it's not a real big problem, is it? Because it's stepping back 17 each time. So that'll be like, what, 34 pips it would go against you of sorts. It's not out the reams of possibility. It's inside of your stop ratio. Your profit is greater. Now, let's say you do this all the time and you figure out it goes back against you all the time. Well, he's pretty much stuck in what he has to do. But what you can do is this. You can go, do you know something? I can put a bigger position size in. So I can go 7 quid. Now I've got an investment of 233. I still ain't put in as much as what the other chap has, but the conditions are identical and the profit is creeping up massively compared to the other guy. Now, if I go 750 at 50, like verse 50, step it back 3 times, get 500 quid and a 2-to-1 and a break even of 125. That's the power of madness. It's using the math in your favor. But what happens is you lose one madness and you think, oh, I've only got a tiny profit in one thing or another. It's got to be in relation to what's going on. Now, you can do other things with it as well. Now, I kept those roughly the same. Now, let's just put this back a second to a fiver. And we go like that. Well, now, if you start doing this and you're getting it down to 1-on-1, your target can be 20, your stop can be 50, and you've still got a 1-on-1 ratio. You are putting less money on the table than the other guy, which is 167. And all right, you're getting 183 back on the other side, or 83 when it's break even. But the difference is this, that bit there. Because this one is always 250. Going to get lacerated and it's got nowhere to go. Here, you've got change and you can go again. So again, that's the math. So you can have a less target and a bigger stop and still have a 1-on-1 ratio. But you've got to work out how many of them you get in. If you're only ever getting one position triggered, fine. Go traditional route, one split, and away you go. But if you're finding the market is moving against you on a regular basis, break your position up, because it will reduce the investment. And the only thing that makes it a nightmare is when you haven't figured out what your parameter of stop is and you put in a crazy stop. Because I've seen guys try to madness 300 pips to gain 20. That is ludicrous. Ludicrous. And then they kick off. And it's because they haven't followed the rules of the process in the first place. Take money out the equation. Stage back gently based on roughly how far it moves against you. If you can nail it on the head and it moves back 20 pips, fine. Split the position in half. Do one straight in and 1 10 pips back. And that extra 10 pips will pay you a premium. That's the strength of madness. Have yourselves a good one. I'll see you when I get back.